All right, let's talk about one of the most polarizing stocks out there right now, Palantir. You've probably heard the name. The question is this company a true AI game changer, or is it just one of the most overhyped stocks on the market? We're going to break it all down.
So why all the drama? Well, it starts with numbers like this one. 523%. That's the return the stock has delivered over the past year. A truly staggering jump. And yeah, it's been fueled almost entirely by the massive hype around artificial intelligence. But, when you see a number like that, it just begs the question, what is Palantir? What do they actually do? And maybe the most important question of all, is there any way this kind of momentum can last?
Okay, so before we can even get into the bull and bear arguments, we got to understand the foundation. The business itself is really split into two very different, very powerful platforms.
Think of Palantir as having two distinct personalities. On one side, you've got Gotham. This is the original, almost legendary platform built for governments and defense agencies. It's their roots, their bread and butter. But then you have AIP, their new artificial intelligence platform. This is what's aimed squarely at the commercial world, and it's the engine that's been driving all this explosive growth lately. So, with that setup in mind, let's dive into the bull case. This is the argument that says Palantir is basically an unstoppable force, with huge deals and just jaw-dropping growth. And the bulls, well, they come armed with numbers like this. 121%. That's the year-over-year jump in their U.S. commercial revenue. This isn't just regular growth. We're talking about hyper-acceleration, and it's pretty much all because of demand for that new AIP platform. And this isn't just some flash in the pan. The pipeline looks absolutely stuffed. We're talking a potential $10 billion deal with the U.S. Army. They just booked a record amount of contract value in a single quarter, their customer count is up 45%, and they keep telling Wall Street they're going to make even more money than they thought. For the bulls, this looks like a well-oiled machine that's only just getting warmed up.
In the software as a service world, there's this key metric for a company's health. It's called the Rule of 40. The basic idea is that your revenue growth rate plus your profit margin should be more than 40%. So what's Palantir's score? A mind-boggling 114%. They didn't just clear the bar, they absolutely smashed it. That number suggests this is a business operating at a truly elite level.
But for every bull out there, there's a bear pointing to some pretty serious red flags. And the case against Palantir starts with some feisty words from the company's own CEO. So CEO Alex Karp recently came out swinging against the short sellers. Those are the investors betting the stock will fall. And while, it's a passionate defense of his company, critics say it's kind of a smokescreen for the real problem, a valuation that just seems completely disconnected from reality. And that brings us right to the heart of the bear case, this number. Palantir's price-to-earnings ratio, a key way to measure how expensive a stock is, was recently sitting at a towering 575.9. Now, for some context, a normal PE ratio is often somewhere under 25. This is a number that means the market is expecting absolute, flawless perfection for years and years to come. And let's put that in perspective, because it's pretty wild. Just look at the price-to-sales ratio. Palantir is trading at 121 times its sales. Meanwhile, giants like Microsoft and Google are down in the low double digits or even single digits. Even another high-growth company like Snowflake isn't even in the same ballpark. The bears look at this and say this isn't just a premium price, this is a valuation from another planet that leaves zero room for any mistakes. And the worries don't stop there. The bears also point out that their international business has actually been shrinking, which suggests this AI boom might not be a global tidal wave for them, at least not yet. Then there's the heavy use of stock to pay their employees, which can water down the value for other shareholders. And, of course, they still rely heavily on those big, politically sensitive government contracts.
Okay, finally, we have to talk about the competition, because Palantir is definitely not operating in a vacuum. The whole AI and data space is maybe one of the most crowded, cutthroat fields in all of tech.
And this market is just jam-packed with giants. You have the specialists, right? Companies like Snowflake and Databricks that already have huge chunks of the market. And then you have the big dogs, Amazon, Microsoft, Google, who are pouring literally billions of dollars into their own AI platforms to compete. So what makes Palantir different in this fight? Well, it really comes down to philosophy. A lot of their competitors sell you the pieces, a database here, an analytics tool there. Palantir's whole pitch is that they sell you the entire ecosystem, all in one, a single integrated platform to do everything. Now, that can be a huge selling point, but it can also make it a much bigger, more expensive, and harder decision for a new customer to say yes to. So after we've looked at the business, the bulls, the bears, and the battlefield, we're left with the one core question that anyone watching this company has to be asking. I mean, it's really two completely different realities, isn't it? On one side, the bulls see a generational company leading the AI revolution with a huge head start and just unstoppable momentum. And on the other side, the bears see a classic stock market bubble fueled by hype. A good company maybe, but one with a stock price that is dangerously, unsustainably high. And that's really what it all boils down to. This is the question that's dividing Wall Street. Is Palantir's sky-high stock price just what you have to pay to own a piece of the future? Or is it a stock that's priced for a perfect outcome that may never actually happen? The answer to that is going to be one of the most fascinating stories to watch in the market. Thanks for tuning in.